Hello everyone, again this is Antonio and I'm coming at you with another exciting video. In this video, we want to talk about two articles that surround Sundial Growers. One article is 3 reasons why I love Sundial, and one article is saying, is it time to sell your Sundial shares? Now, I would like to start this video by saying this is not financial advice. This video is for educational and entertainment purposes only. If you're scared of a roller coaster where stocks or cryptocurrency may go on 80% highs or 80% lows, then I encourage you to get an index funds. There's nothing wrong with index funds. This is just not the arena for you. But for now, let's talk about some Sundial Growers news. And this news is very relevant. It's in the last 5 days, both articles. And I'm just late to report on it. So I see the news, I report on the news, and that's just going to be the moniker of Team Tiggio. We talk everything money, whether it's marketing, whether it's drop shipping, or whether cryptocurrency or stock. That's what this platform is about. So please like, comment, and share this video, as we will do our best to get videos up at least every other day. So for now, let's keep going. Sundial Growers is a risky pot stock to invest in. And this is the article. This is Motley Fool by David. You see his last name. The company is in transitioning. Its business from wholesale to branded sales revenue is falling. Losses are deep, and the company just hasn't given investors much of a reason to be bullish on its operations. Since hitting highs of nearly $4 a share earlier this year, largely due to speculative retail investors, Sundial stock has come crashing to a reality and now trades are around 70 cents. So this thing about the person who got in on this stock and it went all the way up to $4 and they refused to sell. Now, basically, that stock is just possibly too low to sell. And some people just holding out hope that it will come back. So the reason by this article is saying it can come back and it may be reasons to hold on. But investors shouldn't lose hope just yet, although the company's latest quarterly results show lackluster sales numbers that still pose many questions. There are 3 positives to take away from the earnings report. 1, the company is bringing down the number of SKUs. Sundial reported its first quarter results on Monday 11, and its gross margin for the period ending March 31st was awful. Negative 3.45 million Canadian dollars. Even when factoring out impairment and fair value adjustments, the company was still in the red, and it blames the poor numbers on price compression as well as an increase on operating costs. The bad news, that's the bad news, but the good news is the company says it's making changes such as cutting down its number of products. Sundial said in its earnings release that it's liquidating some low margin items and is going to cut back on offering discounted products in markets where the economics don't make sense. All right, so I'm not going to read everything in every paragraph. I'm just going to point out some of the major things where David felt that it was a reason. It posted an adjusted EBITDA profit. Even though its gross margin was negative, Sundial still managed to report an adjusted EBITDA profit, the first time it has ever done so, despite incurring a net loss of Canadian $134.4 million from continuing operations. Much of that Canadian $129.9 million related to fair value changes and derivative warrants. And after adding back inventories obelisk transaction costs due to financing activities and other items, Sundial's adjustment EBITDA was positive 3.3 million compared to a loss of Canadian 5.6 million in the previous quarter. All right, let's keep going. It also, another reason why you want to think about keeping it, it brought down administrative costs. Another reason to be optimistic on the bottom line is that Sundial has been cutting costs. It reported sales, marketing, and general administrative SMG&A expenses of Canadian 8 million in quarter one, down from Canadian 8.8 million in the previous quarter. And on a year-over-year basis, the company says SMG&A costs are down by 35%. All right, so let's conclude this article, and then we're going to get into another article where this person is saying something boldly different. All right, now, while I wouldn't invest in Sundial Growers just yet, there are some positives to take away from Sundial most recent quarterly results. However, there are still many questions that remain, such as what its gross margin would look like in coming quarters, and just how strong its sales would be once it focused on laudable products and low prices aren't weighing down its financials. So that's just the takeaway, and you can go to the food.com and you can search Sundial Growers and you can read this article. All right, so let's talk about this article, which is a little more recent. And this article is saying Sundial stock is going up in smoke. And this is by Joel Baglow. All right, let's talk about it. And let's see if there's something that may catch your attention. Let's see if you're still interested in investing in the stock. And then we're going to talk about price predictions. Will this stock ever get back to that $4 high? Well, a lot of people felt that it was overvalued. All right. With the share price stuck below $1 and no compelling long-term business case, Sndl stock investors should steer clear of Canadians cannabis producer Sundial Growers. Investors continue to hold out hope that Sundial or Sndl stock will again surge at a high as $4 per share, as it did in February of this year, are deluding themselves at this point. The stock's unprecedented 670% run up was due entirely to a short squeeze executed by retail traders who frequent the Reddit chat boards and coincided with other big jumps of so-called meme stocks as GameStop, AMC, and BlackBerry. In reality, there is no justification for appreciation of Sundial Growers stock, which is why it now trades at 78 cents. My thing is, a lot of those stocks that in your portfolio, it's a chance that it will come back to some kind of relevance where you may be able to get if you're getting in it actually at this price point at 70 cents, 78 cents. This is, according to CN Business, this is a price prediction of what they're saying. Year to date, Sundial Growers is still up 59%. So even though it's at 75% now, year to date, it's still up in the green. So some people that got in it early, they still had a chance to make some kind of profit. But people that got in it late, probably at $2 or $3, it may be quite some time before you ever see that type growth to get your money out of this stock. And if you are holding out hope, these are the stock price forecasts. Remember, I said this is for educational and entertainment purposes only. This is not from the words of Team Tiggio. This is from CN Business. The 6 analysts offering 12-month price forecasts for Sundial Growers Inc. Have a medium target of 73 cents with the high estimate of $1.44 and a low estimate of 45 cents. The medium estimate represents a negative 3.73 decrease from the last price of 0.75. So I just want to report on this. While this may not be the best cannabis stock to get into, like I said again, if I see the news or report the news, and this stock, this company, Sundial Growers, will have some work to do if others feel that they're going to get their money out of this stock, or if they're going to see a profit. It has some money to do to their investors, to the people who help own this company. They need to make more changes so this stock can start trending back in the north of $1. So I just want to make this video about Sundial Growers, why this may or may not be a good stock for you to get into. And please like, comment, and share about this video, and I will see you next time.